A very good Monday morning to everyone. This is Doug Campbell with Right Way Options and the morning market preparation video for November 6th, 2017. Hey everyone, it's good to be back in the saddle. It's good to be back home. I always love to travel to Las Vegas, always enjoy meeting fellow traders at the Traders Expo. But it's always nice to get back home where everything is familiar and kind of get back into your routine of the day. So, looking at this market, the entire time we were gone, the market just continued to power higher. Earnings continue to fuel this market higher. The news surrounding the new Fed chair, the news surrounding the tax plan just continues to push and push and push, attracting more and more buyers to this market. Now, I know there's a lot of folks out there thinking this has to end. This cannot keep doing this. But I want to point out, if everyone remembers here, let's go there. The Q or the NASDAQ run-up. I'm going to go to a long-term chart here. The NASDAQ run-up here in the market. And notice that this happened multi-year. This is a multi-year run-up into, it was absurd. It was completely irrational. But I'm only pointing that out to point out the fact that an irrational market can stay irrational much, much longer than you and I can stay liquid if we're trying to fight the direction. So I'm pointing that out just to say this does not necessarily have to end. This market can continue going higher as long as there's money pouring in at the levels that are pouring in now. This market will continue to move up. Now, we could go through extended periods of consolidation, but there's, at least at this point, there's no sign here that the bears are taking over in any way, shape, or form. And be very, very careful with that. We ran into a lady at the show. I think Rick asked her how it was going, and she said, "I'm short the Qs and it's killing me." And there's the prime example of trying to anticipate the rollover. We don't want to anticipate that because we cannot predict the emotions of the market. And a bull market running this strong can continue going in that same direction. So be very, very careful not to overly anticipate anything in the market. Just follow along with the current trend. It's the easiest way to trade, and it's easier than fighting the overall market. So the Qs set a new record high on Friday. The diamonds closed at a new record high on Friday. And the SPY made a new record high on Friday. There's nothing about that that says bearishness. There's only bulls in this market right now. We're buying up everything in sight, and the market is pushing higher. So stay with the trend of the market. So I want to stay with our current positions that we have. Our current positions are looking good. One of the ways, if you're feeling pressure in a market like this, one of the ways to alleviate some of that pressure and to avoid complacency, and that is over trading or being overly long in a bull run like this, is to consistently take profits. As the stocks move up, as the market continues to move up, relieve that pressure by taking some of those gains and putting it in the bank. That removes those emotions of fear and greed and gives you an opportunity to better balance yourself, balance your emotion in the market. There's nothing like going to the bank to remove that emotion. So consider, as we go up, as this strength continues, try to take some profits into strength. And that will help you a lot manage that emotion of this has to roll over at any time. It doesn't really matter. As long as you're taking profits, you're doing the right thing in the market. So let's take a look at IWM. Now, poor IWM has been just kind of stuck. It's not going anywhere here. And every time it looked like it was going to break out, it gets reversed and comes back down. So I'm going to have to register or mention that I believe IWM is the weakest index of the bunch right now, even though there's no sellers here. As you can see, we clearly have a level where buyers step back in. So there's really no sellers here, but it's the weakest of the market because it's not participating with the overall trend that we're seeing in the other indexes. Let's take a quick look at the VIX. The VIX on Friday making a brand new record low close. Okay? The VIX closing at 9. What was the closing print? Let's see. Closing at 914. A new record in the VIX. And I consider this a danger zone in here. I consider this the place where we can get these really quick fear spikes. But as of right now, there's no fear in this market. There only seems to be upside, and that's why we're looking at complacency like this. Just be really careful you're not being complacent. And what I mean by that is make sure you're taking profits as this market rallies. Okay? Let's take a quick look at T2122. T2122 is the high-low 4-week high-low ratio. That's all it is. And I want you to notice that as much as the market just seems overly bought, just completely running out of control, notice that we're down here in the midpoint of the high-low ratio, which means the market has more upside potential. Yet we could certainly continue to move higher. And with all the earnings that are still yet to come out, that is definitely a possibility that we can still move higher. So really quickly on the earnings calendar today, we have a significant number of earnings and really a phenomenal number of earnings for this week. There's over 1,500 companies expected to report this week on the earnings calendar. You can see over 200 here today reporting. And that ramps up to 500 by Thursday. So well over 1,500 companies reporting this week. And that, of course, means that as long as those reports continue to come in with the same kind of bullish look that they have over the last 2 or 3 weeks, then we could see this market continue moving higher. So watch those carefully. Also keep in mind that no matter how bullish a market is, that anything is possible. We could get a big newsy company or something that reports that definitely affects the market. Obviously, we could still get any kind of international troubles or something along those lines. Could cause some trouble. The president over there in Asia could really stub his toe, say something really stupid. And that could affect the market. We never know what it is, and so we have to just stay laser focused on price action and follow along with that price action. If we take a look on the calendar today, the economic calendar today, there's really nothing here to move the market. We got some bond auctions, and we do have a Fed speaker here at 12:10 p.m., but really nothing for reports in here to do much. And as a matter of fact, we have a really light week on the economic calendar. So we're going to be probably moving based on what we see in these earnings reports and news reports that come out over the week. So I want to first again say thank you to everyone. I apologize I wasn't around for a few days. Just we thought we would be able to do some broadcasting from the Trader Show. We were so busy it wasn't possible. So I want to thank you for being patient on that. We're back and we're holding some really nice positions. We've got some nice gains in our account. So we can stay with our trades and stay with our positions and be in pretty good shape. I would like to, if you're new to this video, if you've never seen this information before, please do me a favor and click on that subscribe button and those follow me buttons on Facebook. I would really appreciate it. And always, please feel free, to leave a comment. Click those like buttons if you feel it's worthy. And please feel free to share this video if you think it can be useful to other folks. Everyone, take care. Have a great day. I wish you all fantastic profits, and I will talk to you all very, very soon.